Hey, it's Soleil, and this is episode 500 of the Orange Pill Investor. I probably should have had something bigger planned for the 500th episode, but it's business as usual. And that was a little bit of a blast from the past. I don't know if why YouTube decided to remind me of that one, but that's actually the song that this guy named Marquise Scott did a shit. What is the genre called? Nonstop. I think it's called Nonstop. Anyway, um, badass dance routine to that one, and YouTube just decided to remind me of it. And it was pretty sweet. So thought I would throw that one there today. Um, gonna be a short one. The only thing I really need to do, might have to adjust the weeklies on strategy, but the first thing that I need to look at is Tesla, since there is earnings after market today. And so I have to decide whether I want to remain short on this covered call position. In general, let me see. I don't know if this is going to come up. Depends on if my VPN lets me. Okay, we might be all right. All right, this is getting annoying. There we go. So it doesn't look like it is terribly indicative, but a lot of times what will happen is as earnings approaches, implied vol will creep up. Didn't happen last quarter, was actually still trying to revert to the mean from this previous spike. So maybe that's why there was no IV pump before last earnings. But to a certain extent, it was kind of low and then has been creeping up. And so in general, you can get the most implied vol right before earnings. So in a sense, this is the worst possible time to take covered call positions off. However, if I'm worried about Tesla's price spiking, then I could go ahead and just take it off and make a directional bet. This chart looks an awful lot like one that Matthew Crowder put up back, this was years ago, back when he was Trader University. And it described when to buy a stock. And it was after you get a dump off, right? You get a sell off. It bottoms out, and then you get some higher highs and higher lows. And then we had another correction, but then we're getting higher highs and higher lows. And there was a period of like, I don't really see it in this chart, but then there was just kind of like this period of sideways action where institutional investors were stacking. And then when you get this bump, this is when you buy. And the reasoning is that the institutional buyers have realized, and I don't know if this is when, so what was this, September 11th? This might have been right around when robotaxis were like expanding. So maybe the market has figured out that robotaxis are for real. I know they still have live monitors in the cars, but the market may have realized that profit printing is coming based on robotaxi rollout. And so we got a bump here, but this could be just like the starter's pistol going off. and then now we're kind of trending sideways. But let's see, Tesla's highs before were 475. So if we can get to 475 and put that in the rearview mirror, then we could be looking at price discovery again. It doesn't necessarily mean that it's going to, the rest of that leg up is going to be on an earnings call. But earnings calls are the basic binary events that can trigger the market to do things. So announcements like Robotaxi or whatever can do them a little bit off schedule, but every company has 4 chances a year to shock the market by some kind of unexpected optimism. And so if I'm worried about that, I could go ahead and take this position off. The only problem is that since this is an IRA, I can't even dip into margin temporarily. So in order to pay this $2,400 off, I would have to peel off some strategy shares, which is not the end of the world. So I think I'll go ahead and do that. It's going to cost me $2,500. Okay, it's not going to let me close them together. So 10 shares of strategy would get me 2,800. So maybe 9 shares. Make sure I'm trading in the right account. Yep. Yeah, that should just do it. All right, let me reshare without volume. Hope I didn't blow anybody's ears out. All right, so that gives me just enough to close this position. And regardless of what Tesla's price does, I'll just put it back on tomorrow. This means I'll only not be collecting theta 4 times a year, 4 days out of 250 something trading days. So not a big deal. And worth, well, I guess leaving it on in something that I'm so bullish about is not really worth the risk. All right. When I rolled that 12 days ago, I probably should have been looking ahead at the earnings and just not bothered. That way it would have probably been a lot cheaper. And actually, strategy looks like it's down another $15 from when I looked at it earlier. So I might actually need to roll some of these. But I'm in a bit of a hurry, so I'd kind of rather not. Well, I know I need to do the weeklies because these are not worth much. I sold them for 300 almost, and they're only worth, whoops, they're only worth 38 with half a trading week left. So no point in leaving these on. That's eating a little bit into margin, and it's also playing havoc with my net theta. It's extremely negative now, so I'm losing money every day in this account if I leave it in this position. So I got to come up with 228 theta if I want it to remain positive. So if I roll down to the expected move, that's 116 theta per contract. So if I do 2, that should just get me on the other side of positive theta. There we go. So practically theta neutral. But the question is, do I want to go ahead and put on, oh wow, so is earnings really next week on strategy? going to put another one of these on. Close 4, put back on 3. And pump theta up quite a bit. Now the other part of this equation is going to be the ones that are 45 to, ish days to expiration when I put them on. These are actually ready to roll. And since they are they're part of a poor man's covered call, so I'm not going to take these off for Strategy's earnings. I will take these covered calls off for earnings, just in case we get a bump. Not really predicting that we will. It's more superstition than anything. But let me go ahead and just roll these. Actually, you know what? I might not be able to roll them because I don't think unfortunately, the 45 DTE positions are not even available. It's just the monthlies. I would like to be able to roll this to like December 6th, but unfortunately, they haven't come out with the weeklies yet. So I guess I will pump the brakes on that. Yeah, I'm going to have to stick with the 37 DTE. Same. Same. And this is the one I already looked at. All right. Unfortunate to a certain extent, but at the same time, it saves me a little bit of time. I don't have to bother. Okay, the 1450 covered call. Sold it for 25. It's only worth 4. Half a trading week left. What's my cost basis on these? Cost basis is 1488. So I can let this go till Friday or maybe roll it down. Let's roll. Yeah, I can roll it down to the 13. It's not worth my time, really. .21. 22. 20. Let's try 21. Yeah, everything else looks pretty fine. Kind of stuck holding the bag on the Strive shares. There's no meaningful premium at any covered call strike. So I think that'll do it. Let's check the chat. Let's check the chats and call it a day. What's up, Kevin? Yeah, a little bit of dubstep today. A little blast from the past. Is Onegashimasu an acceptable greeting? I know that's what we used to say before we interacted in jiu-jitsu class. That one would be on the short list of languages to learn. Probably be pretty useful. All right, I think this is just going to be a quickie for today. So thanks for tuning in on episode 500. No, won't be slowing down any. Be another 500 episodes before you know it. So appreciate everybody for tuning in.